Welcome back, guys. Funny thing, I was actually mid-recording and my OBS just shut down. So I have to do it all over again now, but that's fine. Let me start off with saying that I'm going to go over some live price action first, and then I will recap the trades that I've taken Sunday and also today. Before we get into the live price action, let me say that I'm going to be back in my hometown or in my home country Thursday, and I will get a mic, so the sound will get better. So bear with me. But yeah, let's get straight into it because I was already explaining everything, and then OBS just shut down. So recapping last stream real quick, I was telling that I cannot particularly be very bearish because we were in a range and we just grabbed all sell side liquidity and we just took out the range low. I also said that in order to have a full range rotation back up towards the all-time high, we need to break that structure from the top down, which is our most important structure. Break this high, and that confirms that we're going to have a full-on rotation back towards the all-time high. Also said that this supply zone is a very important supply zone since it's the last supply remaining before we take that market structure high. So the most likely place, I have no idea if I said that right, but it's most likely for price to reject from here is the highest probability area for a rejection for that lower high, for that lower low. And we know once we break that internal market structure from the low up, that can confirm that the lower high for the lower low is in on that bigger downwards pull. Okay? So doing that, I took out that range low and we started trending up. And we actually came into that make or break a supply zone where I was respecting or expecting a rejection. And what happened is we actually created a Model 2 / Model 1 distribution into the supply zone. So as you can see, price started ranging into this zone. And let me make it more clear, just like this. Okay, delete this for now. That was from the last recording. Okay, so what we actually had is we came into this supply zone and we started to form a range. So we had the high, we had the low, and we created a range. We trapped the range high and then we create our third tab, having our local Model 2 distribution, a 1, 2, 3 Model 2 distribution that actually hit its target. This Model 2 distribution turned into a Model 2 accumulation. Then our range low here, our sweep of the range low, and our retest, Model 2 accumulation. That also hit its target and actually exceeded the target, turning into a bigger Model 1 distribution where this is your 1, this is your 2, and this is your 3. That had this follow through. And you can actually say that this Model 1 went over into a bigger Model 2, where this is your whole range, like this. And you have your tab 1, your initial range high. You can even pull it from here. That's subjective. Let's do it from here now that this already played out. And now this is our new range. R1, 2, and R3. Okay? Well, extended. I was looking at this Model 2 because as you can see, Wyckoff is very respected. However, it did not give us an entry, or at least it didn't give me an entry because there was no market structure to confirm an entry here. There was no market structure to confirm an entry here, nor here, nor here, nor at this high, because how did we come up to create that third tab? It was a straight shot up. There's no market structure to wait for to break bearish, confirm an entry. So I was looking at this. I was like, okay, you know what? We have a 1, we have a 2, we can potentially have 3 in the making. And I was watching for that internal market structure from the low up towards that third tab to break, just like this, to potentially confirm an entry. So I was waiting for this to break. And then once this breaks, we can confirm the price is going to go towards that range low. However, as you guys know, my entries always need to have a certain risk to reward, and the minimum is 2. And as you can see, the way this candle broke, it closed all the way down here. So having to enter there with my stop above the high while having a first objective or my technical target, which is the range low, I'm risking 1 to gain zero point 0.8. That's not worth it. So unfortunately, I couldn't get an entry on this. And then what happened is we swept the range low, right? So of course I'm also looking for longs, but I was also aware the way this formed was not that bullish. So I'll get into that. Is we swept the range low, swept the range low. My apologies. And we had our 1, we had our 2, and potentially we had our 3 in the making. But also here, we didn't really have structure to wait for it to break bullish on this initial move down because the market structure high was right here. And probably if you break this, having to put your stop below that low, there's no entry for us there. However, we went deviated the low once again, creating our new market structure high to be very close. What happened is I was kind of waiting um, for that market structure to break back to bullish. However, the way it tried to break bullish but kind of failed um, made me more bearish and more careful to touch a long, since this was not even a break. Yeah. This is an SFP. This is not a break. And then we went up higher again just to SFP it again. Then we went up higher again just to have a quick break above, followed by the next candle immediately close back inside. And this is not what I like to see as a break. This is no good break for me. I want to break to have a few candles above and then backtest it for higher. This is not a good break. Now I was realizing like, yo, we are taking the range low and we are kind of failing to break that market structure back to bullish. So I kind of zoomed out for a second and I realized, yo, we actually have a 30-minute structure break. Get rid of these dots. Oh, so I realized, do that real quick, back in. Realized, yo, we actually have a 30-minute break of structure. And I know that the most important pool in this uptrend was that more higher time frame 1 hour structure pool that went from the low up, higher low, higher high, higher low, higher high. Okay. However, if you break more local time frame market structure, that can confirm that you're going to visit the more important low, this 1 hour low. And when that breaks, that can confirm that you're actually going to the range low. So it's kind of a domino effect. I was aware, like, yo, we broke market structure back to bearish after having a model 2 distribution. While trying to break back to bullish, but we're failing. This is actually a clear sign, a clear trading setup that I call exhaustion. Okay. So the most obvious place to reject from was that push up before that massive and aggressive move down, creating that third tap. This whole area, you can even refine it towards this pool, is range supply. We can clearly expect a rejection in here because we can see that buyer stepped in and sellers took over aggressively, pushing price down. So if price comes back up here again, we can expect that they protect their positions and open sell positions to push price more down. And coming back to that exhaustion type of entry, if you see price coming up, yeah, but it's just wicking the low, this is actually fair, or wicking the high, my bad. That's actually showing that price is cooling off, and we can expect that rounding off effect for price to have that rotation back down. What happened is wick the high once, wicked it again here. We wicked it again here. I'm not calling it a break, or a very, very poor break. Followed by another wick, then maybe another wick with a close above afterward. If price does something like this, where it takes the high and just keeps on wicking the high, that's actually very bearish. And oftentimes what happens, I call it exhaustion. It's like it's clearly showing signs of weakness because it cannot break back to bullish. And maybe someone is filling their limit orders above these highs. Why price, which could be the cause where price cannot even go higher because the limit orders get filled and it immediately pushes price down back afterwards. But what actually happens is that oftentimes when we have exhaustion like this, you always have that fake break or that massive move down. It could be wicking highs here, wick, 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 and then that last push up is actually a break. And this is where most people get trapped. Right in that break is where most people get trapped because they're like, okay, well, now we finally broke it, right? Or we finally broke it, we're back inside the range, and then it just absolutely reverses on them. It's something I've noticed also a lot on Forex, actually, but this also happens on crypto all the time. I haven't seen it this clear in a while. So I was watching it and I was seeing those wicks, 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 wicks everywhere. Also having that fake break. However, we have a big problem. There was no market structure to confirm an entry. For me to confirm an entry on an exhaustion trade like this, we need to have structure break back to bearish. And the most recent market structure pool, which is the most relevant to confirm an entry, there wasn't a market structure pool. It was one straight shot up. So that was very unfortunate since I was looking at this and I'm like, should I use this market structure low as my, or this pool as my market structure low? But it's not 1 minute market structure, it's more like 30-second market structure. And I just have a rule with myself that I don't use the seconds. It's actually funny. Every time I do not use the seconds, it works, and every time I do use the seconds, it doesn't work. That's why I made the rule that I'm not going to use it anymore. But yeah, we clearly had that exhaustion showing that price could not break above its previous market structure high, having that fake break right here, that manipulated break, and then price just absolutely dumping down from there. So as I said, we had that main break. That's 30-minute market structure break right here. So what's expectational order flow? A lower high for a lower low, taking us towards that more important low, the 1 hour, right? From the more higher time frame market structure pool from the low up. Well, we came there very easily because look how we came up, right? It was just this is just sell side liquidity and this is a push up. So the faster you come up, the faster you can come down as well. And yeah, we broke that low, hitting that hitting that 1 hour order block with imbalance. You can when an order block looks this clean, like it has no wick to the upside, it closed, it opened, and it just absolutely pumped. You can expect somewhat of a bounce from it. Like don't just trade a reaction, but expect a lower high to take place here. So I saw that this 1 hour, which is also a 2 hour market structure pool, they both broke bearish and closed bearish. So I posted on Twitter, like, yo guys, broke market structure from the low up, expectational order flow is a lower high for a lower low. Big chance we visit this low again and potentially start a new range consolidation. Because once we break this market structure right here, we expect that bigger pull from the top down to continue for a higher low or a lower high and a lower low. So we broke that 1 hour bearish, bouncing off that range demand, and that's when I was posting about yo, we can search for that lower high, for that lower low to take place. Well, the same way that this break confirms that this market structure pool continues itself, right? Same way we can also say that a low time frame break in this little uptrend, yeah, confirms that this market structure pool continues itself like this. You see how that overlaps? It works on every time frame. If the moment you break the structure from the low up, you can confirm and say that the most likely the lower high for the lower low is going to take place on that bigger black market structure pool, right? So that's why I posted on my X account again that like, yo, I am looking for here. I am looking for shorts if we break that market structure low and get a retrace. So breaking this low, getting a retrace, and now coming towards that range low. Well, what is exactly what happened? If I put it on my chart the way I put it there, I was talking about this, like this. I was like, yo, if we break this low, I'm looking for a retrace back up for that lower high, for that lower low, taking out this low. And after you take out this low, you can see from there what happens. Because then this internal pool doesn't matter anymore. It did its job. And now you look at the bigger pool, which was like this. So I posted this, and what happened? Price came down, came up, and I made that lower high for that lower low because that was expectational order flow, right? It went a bit higher than I drew here, but that doesn't matter. That this was just an estimation, like, yo, I'm looking for a retrace short. However, also what was very unfortunate in this scenario, again, I had no market structure to confirm an entry. So we grabbed the high here, and we broke that internal market structure back to bearish right here. Looking for a retrace short. When do I press the short button? When we break that market structure from the low up back to bearish. And I'm already on the 1 minute, and there was no market structure to confirm an entry because there is none. This is the pull up. So then you can say, yeah, once we break this low, this lower high is in. Then your target is the primary low. So I'm not opening a short right here if that's already the target. Like that's nonsense, right? So fortunate because at the same time, again, this was also 30-second market structure, which worked, which would have been an amazing short if you took it on the break on this 30-second, stop above the high, target the low. It will be a very nice 3.4 risk to reward, especially because the way we came up, we also left easy sell-side liquidity right here, which made Warren very nice short. Actually hitting that last supply remaining. So very clean setup, just unfortunate that I could not get an entry on it. And I stick to my rules. I don't use seconds market structure unless something very special presents itself. But 99% of the time, I don't use that second market structure. So it's very nice price action. It's price action. It's respecting market structure and the TA very good. And yeah, we took that low, and now we had a tiny pullback and broke back lower again. And I wouldn't be surprised, as I said, to take out this low again right here, and then maybe start a bigger range, which I also posted on Twitter or on X, whatever you want to call it, where this is our range, you know? Because what I also said, if you guys don't follow me on Twitter yet or X, you should, is that, yo, maybe this is going to be a new range since this is what happens most of the time. Let me grab it real quick. Here. I do want to mention that bottoms oftentimes take longer to form than a few days. This is the normal cycle. Price dumps, and people that entered late, they panic sell. Price pumps, and the panic sellers buy back, followed by a retrace in price again, such a consolidation, where the impatient sell again, and then we have a pump. Meaning, this flash crash move down, there were a lot of panic sellers, and then followed by an immediate retrace of 12%, we can expect those panic sellers to buy back again. And price, as I said, oftentimes takes longer to form a bottom than just we do what's this 1 day, a few hours slash 1 day. So it's most likely that we are going to form a range here where maybe we deviate the range low more before we head higher. And the people that bought back higher that are waiting for price to come back to their new entry end up being too impatient and they will sell again. And once they sell again, that's when it starts to absolutely pump. That's just my vision on the market right now. Wouldn't be surprised to come towards this low, since there's also no more demand below us. It's just wicks. But we could fart around more in here. Maybe we create like a bigger range in here. I don't mind. Range is something I love. It's where the most money is made. Those are my life thoughts right now and kind of what happened here. So then the trade that I took on Sunday, I was actually just let me go back in time. I'm checking where did I take it. Sunday, one, two, took it right around here, yeah, I think. All right, let me go back. Okay, so I'll delete this for now. I was just following the market structure from the low up on the 5 minute, which was a low, a high, a higher low for a higher high, creating an obvious range here. So I was pulling my fixed range tool like this, or not my fixed range tool, but just my range. And I was looking at this range to trade. Let me grab where was my exact entry. Yeah. So as we know, we oftentimes have ranges within ranges. So I knew we had that primary market structure pull down and this internal market structure pull up, creating a range. Well, we actually had a range within a range right here. Put that range to, there you go. So price came up into that premium section of this bigger range here. Above the 0.5 is what's the premium section of the bigger range. And we broke market structure back to bearish. So from the low up, we got that low, that higher low for that higher high, followed by that first lower low. So you can expect in general a probably a redistribution for a lower high and a lower low. However, I could not ignore my entry model in this premium section. So it was a bit more risky since I'm longing into the premium section. However, we had that model one. Let me get rid of this EQ so it's more clear. We had that model one accumulation vibe going on here. So we had our range low, we had our sweep of the range low, followed by a bigger sweep of the range low, indicating a model one accumulation. For my entry, I always wait for market structure to bring back to bullish. So the most important market structure pull is the market structure from the top down in this situation, which is down, up, down, up, down, up, down. So at this point, I'm waiting for this market structure to break before I even touch a long. Okay. Well, okay. So, okay. So was waiting for this market structure to break back to bullish, and we actually had an order block with imbalance waiting for us at the market structure high, indicating that there could be a potential of a flip in the making, right? So we got our rejection from an order block with imbalance before we actually broke that structure. And then you can see that this, or you can say that this pullback, you know, this pullback, this is where buyer stepped in before we broke that structure. What can you expect when price comes back? We can expect a rejection. And it looks like these are actually really nice. So I had my model one, I had my breakup structure to confirm an entry. We also broke back inside that volume area, which is actually, yeah, I would call it wasn't that significant because yeah, the break was kind of already a full on rotation back to the volume area high. But what I saw that we did have a clear volume profile with a nice P shape. So I saw more as like we flipped the POC, which is a very obvious POC because in this range this is clearly the most volume right here. So I was expecting like a POC backtest in order before we go higher. While having that POC confluence, that flip confluence, that break of structure confluence, we also had a nice return to zone right here. I was like, you know what? I cannot. This is one of my entry models. This is something where I don't even have to think. I just have to execute, right? If I have all these confirmations. So I had a limit order actually on the entry. I had my stop below the low, and initially I targeted the high. However, as I just told you guys, we were actually in a bearish market structure environment since we had that break here. So what's most likely for price to create, or if it's going to create a range after just breaking bearish, it's probably going to be a redistribution. So I saw the Model 1, and the technical target for the Model 1 is actually the range high. However, I took profit right here. Yeah, that's just lucky timing. I saw the liquidity, I saw the push up, and I was aware that, yo, this could easily turn into a 1, 2, 3, a Model 2 redistribution since we broke market picture back to bearish here. So that's something you always have to be aware of. Wyckoffs always go over in one another. We can have an accumulation going over and turning into a distribution. Um, so I was aware of this. I took profit when I was like, okay, we're close enough. This is fine. It could turn into a redistribution. And that's low-key exactly what happened. However, I did not get an entry on the redistribution. It was also Sunday later, so I'm not active behind my PC on a Sunday evening. But there was no again no market structure looking at this upwards pull. The 1 minute low was actually here, and once you break that, nah, maybe there was something worth you. Hold up, this is the technical target. That's what it hit. A short here with a stop here and a target here. I'm just seeing this now. This is actually a valid setup that you could have taken for sure. Since we also had a lot of buy side, yeah. Since we also had a lot of buy side or sell side liquidity right here and back here. There's no real demand remaining in this move up. So it was all sell side liquidity and a market structure break here that confirmed that Model 2 distribution was more likely than that Model 1, and we were going to go lower. Since we were also in the premium section of the bigger range in general. And we put the Q on our chart again. Yeah. But this is not. This is I'm seeing this right now. It was actually pretty clean. I wasn't paying that much attention to it on Sunday, but yeah, you had that Model 1 that actually failed and turned into a Model 2. Where that Model 2 Loki has its own little Model 2 going on right here. You have the 1, 2, 3. So that's actually pretty nice to see. I'm just noticing that now. Yeah, and then it's Sunday night. I was posting a few things on Twitter, but not really watching anything. We ended up hitting the target and having actually a massive sell to buy, and then price just went higher actually. Yeah, and then price went higher, and then we were at the place that we just discussed. So that's kind of Bitcoin. That's I had like since it was weekend, I was kind of hesitant to enter a long here, but I just got all the confirmations. So if I have that, I just have to take it. But I took it with a 0.5 risk just because it was the weekend. It was a 3 RR, but I cashed out 1.5, which is a nice start of the week. And yeah, I was looking for that short here, didn't get it, and then I was looking for a short here, didn't get it, and then I was looking for a short here and I didn't get it. So what you can take from that, yeah, what you can take from that is that oftentimes I will predict where the market is actually heading to just by the way price is forming, but oftentimes I also don't get an entry on it. And that's completely fine with me. Like that doesn't bother me at all. Of course, rather I'll be in the trade, but I have my entry confirmations and my entry models. So you just have to stick to those, right? So yeah, that's funny seeing it. I was looking for a short here, didn't get it. Looking for a short here, didn't get it, and I'm looking for a short here, didn't get it, because it was all seconds market for sure and not 1 minute, which is unfortunate. But there will be enough opportunities this week, especially if this is going to be a nice new range. Oh boy, that's gonna be amazing trading. So that was the long I took on Sunday. So I didn't take a trade today on Bitcoin. However, I did take a trade that I shared on X again. Funny thing is that I actually oh, let me go to my profile. I actually forgot to press send. So I want to post this, have that model to accumulation, breaking that internal market structure and having that return to zone for a 6 RR trade. But I forgot to press send. So I went to my Twitter to post the result of the setup, and then I realized, yo, the post is still open. But yeah, coming back to it on gold right here. So in general, gold had that massive sell. However, our primary market structure is still simply pointing up, right? So who's to say that we cannot look for a higher low and a higher high? And I knew that my 5 minute market structure broke back to bullish right here, but I wouldn't be surprised, or I wasn't going to be surprised in that situation if this was just like a tiny little market structure break and we did end up creating a range between this low and this high, or this is your bigger range in the making. And maybe that can be an accumulation that makes us go higher again, a new higher high on the 4 hour. But yeah, I was aware of this tiny break as well, and I just had my range from this point to this point after that break, which is the valid way to do it. And we had that range demand waiting for us at the below the range low, which is always nice because then we can sweep liquidity and actually hit demand. So I was watching it, and yeah, we came into it, and then we actually got a bounce and rejected from literally the only supply remaining in this range, since everything above us is pure buy side liquidity. All of this is pure buy side liquidity. There's not even a good 1 minute significant order block within balance that could stop price from coming higher. And what we oftentimes actually see with Wyckoff accumulations is that they test supply zones and then come back before going higher, actually getting rid of it if we come back again. I hope that makes sense. It's like, let's say price comes back up and we don't hit the supply zone and we come back down for that potential third tap of the model to accumulation. Well, if we come higher after creating that low, we still have the resistance of the supply zone. If we come up and we hit it, we come back down and we break structure back to bullish for that higher low for that third tap. Now the supply zone is not in our way anymore. Once it's tapped, it's did its thing. It's gone. Okay. So it's always nice to hit those supply zones on those retraces up after creating the second tap, because now we don't have to look at the supply zone anymore and we have no resistance and it's just a straight shot up. So I was expecting a Model 2 to be created on gold since there was no reason to come lower because we hit all demand here, right? We hit all demand and we swept all liquidity here. I didn't see a clear reason where price had to take out this low again. So as we know, or as you at least should know, that the most important market structure pool to break for a Wyckoff to confirm an entry is that most recent pool. Same way on Bitcoin, we just discussed that the most important market structure pool to break is the market structure pool between this low and this high to confirm that high for the third tap, Model 2 distribution. The same way it is for an accumulation. When you come down, take the low here. So the market structure between this point and this point. needs to break bullish to confirm an entry, which in this situation is the market structure between this point and this point, right? Oh, let me make that better. And this point. So I was waiting for that to break the bullish. Very, very simple setup. We swept somewhat of all the liquidity because I know I like to say that the third tap most of the time sweeps all liquidity. And this time it kind of it swept some, but there was more. But if you take this low, you're probably taking the main low as well. And I didn't want it retracing that deep to create a model two, so I thought this was kind of the ideal place. It just looked the best. And yeah, we broke market structure back to bullish here, right here. And I actually waited. I didn't enter on this 1 minute break. I actually waited for the next candle to form. And I saw that this candle went down immediately and we left sell side liquidity below us. So I did not enter immediately. I saw this candle, I saw the sell candle, I decided to wait. I saw the doji candle, I decided to wait. And then I saw this fourth candle that went back up after mitigating this demand. And I was like, okay, now I'm entering. So my entry was right on this candle. I'll put my stop at the point one here, put my stop there. And it's a Wyckoff, and we have no clear resistance. So the technical target is that range high, actually aiming for that 9 RR type of trade. And I was in nice profits. For sure, I was in nice profits. But I had to be aware of news, unfortunately. So I don't like to keep positions open during news events, because you just never know with news. So we actually had news at 2:30 UTC plus 2 right here. So if you let me go into a bit more depth about how I managed the trade here, because I think a lot of people can learn a lot from it. So I was aware of that Wyckoff model too, and I got my confirmation right here. Actually, what happened is, okay, so under this low, if price hits my stop loss, I lose 1%. Okay. And what actually happened is that we broke market structure back to bullish, but immediately after we did that, we kind of created a model two distribution on a low time frame. So we broke it back to bullish, but then look what happened here. This looks like a pattern you guys should know by now if you watch my streams. We actually created a model two distribution. So that's not what you want to see. If you break market structure back to bullish, and immediately after breaking it back to bullish, you kind of create a model two distribution. That's not what you want to see. You want to see a bit more follow through. However, instead of stressing, we start to manage our risk. Okay. So get rid of that. Okay. So first of all, our stop loss is here, right? Oh wait, did I say 9? No. Oh no, my bad, guys, my bad. The entry was here, the stop was here, because a 6RR was enough, and I was more than comfortable. Okay. Now I remember. I actually posted it like this as well. Let me grab it. Yeah, stop below that third low. Yeah, okay. Perfect. My bad. My apologies. So um, since we left that since we had that sketchy break in the beginning and we left that sell side liquidity, I was not comfortable putting my stop that tight, because I was like, what if we just sweep this and then we still go higher, still having that 1, 2, and 3. So I wanted to be more sure since the RR was still worth it. It's a 6RR. And I kept my stop below that third tap. Okay. Because that's going to be important. I kept my stop below that third tap, aiming for a 6RR trade, which is more than enough. So then after the break, we immediately create a model two distribution, which is not what you want to see, right? So I had that model two distribution on my chart. Let me get rid of that range demand for like having that one, that two, and that three. Okay. So immediately after the break, we create that model two distribution. So I was immediately like, this is not what I like to see. I was monitoring it live. And managing it live. So what happened after I saw this move down, at this candle right here, I was like, okay, we can have a model 2 distribution. However, it could just be to mitigate more demand to continue higher. So I really do not want to lose this low, because if you lose the low, you're actually breaking market structure back to bearish. And if your confirmation was a bullish market structure break, and a few minutes later you break it back to bearish, you should be very cautious and maybe you should exit your trade. Okay. So the moment we came down on this candle right here, that made this model 2 more clear, I was like, okay, you know what? I'm moving my stop loss up. Because in order for price to get all the way down to this low, we have to break this low. And then we break market structure back in bearish. First, my stop was below here. I'm risking 1% when the stop is below here. Now I'm moving it up. Now I'm only risking 0.5 to 0.6% just by moving my stop loss up. And I also told myself, yo, if we break this low, if we break this low with a good break, I'm closing one position. I have three positions open. I'm closing one position and letting the other two letting me get stopped out on the other two. Okay. So if that were to happen, if price were to break this low with a good close and we got that retrace up, which you always get that retrace up most of the time, always most of the time, but oftentimes you get that retrace up. That actually, if I close my position there, now I was only risking 0.3% on this trade. So even if I were to lose that trade, I'm losing 0.3% just by managing it live and adapting to what the market presents, right? Which is a very key factor. You want to keep losses as small as possible in a valid way. And this was all valid from a market structure entry model perspective. Okay. And that's so important. We want to be able to de-risk in a valid way as quickly as possible as traders so we can just have a risk-free trade. But that in a valid way is very important. Just don't, you cannot put your stop loss to entry on a random point because then you can just wicked out before price actually hits your target. However, what happened is we had that model 2 distribution. It hit its target, it hit the range low, but it turned into a model 2 accumulation. There you go. Right? And we went higher. So the moment, yeah, we broke this high and I saw these candles pump up, why would I want price to rotate all the way back down towards this low here? Let me clean this up for you guys. Because we just had a model 2 reaccumulation in the bigger model 2 Wyckoff. If price breaks this high and comes all the way back down here, we're breaking market structure back to bearish again. So what do you think is going to be my invalidation for the trade now? If we go below this point, right? Especially since there's no resistance up here. So why would it not just pump? Why should it reverse on me? It shouldn't. Okay? The clear invalidation is here right now. Now I'm only risking, I think it was 0.1%. Right? So that's how you manage your risk. So I was risking 1%. We had the model 2 distribution. I didn't like it. Move my stop up to here because in order to get to here, we had to break it back to bearish. But we actually made an accumulation and we broke higher. Well, now I don't want price to reverse because why should it reject here? There's nothing to reject from. And in order to go here, we have to break market structure again. So my evaluation is here, and now I'm risking 0.1%. So that's actually how you can initial trade accordingly and actually have very small losses oftentimes and very big wins. What happened is we went up and we kind of formed a range, came a bit more down, and then I was actually looking at a model 1. Let me go back one more. So I was actually looking at this as a reaccumulation where we have our one tap. Let me get rid of this EQ. So I was actually looking at this as a reaccumulation where we have our one tap, our two tap, our three tap, our sell side or our buy side liquidity above, and a break. However, right now we are at 1 minute before news. So this is actually right here is where I close my long from down here for a 2% gain, and then news came, and it's actually good that I closed my long because we actually wick down, and I don't know how massive the spreads on a wick like that are. Could easily stop me out, and price end up going lower. So maybe we do have that situation where this is going to be the big range. I don't know what price is doing right now. Yeah, see, there you go. Okay, that's actually funny. Let me get rid of this. I said in the beginning as well, there is the potential that this is going to be your new range, right? Well, what happened? This model 2 accumulation never hit its target, probably a bit more caused by news. However, we still have that buy side liquidity above us, right? Well, we actually swept this low, broke back inside, and we had a full rotation up, indicating that this is indeed the new range. However, there was no market structure to confirm an entry because the way we came down was pretty aggressive. Our market structure to wait for was all the way up here, and we broke it ever so slightly, breaking internal back to bearish on the 1 minute, also on the 2 minute. 3 minutes not valid anymore. Kind of had a range, kind of broke higher from that range. So no, there wasn't really a confirmation for me. Long in here. It's nice that see that this is indeed the bigger range. Because now what we can expect is, and from that primary and income market perspective, is that main pool, the main market share pool, is from the low up. It hit low, high, higher low, higher high. Well, when can we expect a higher low to be in for another higher high? That market should down bearish back to bullish right here. So now that you took this low, we actually have internal market picture to work with. We wicked it. So if you break this high, there's a big chance that price is going to rotate all the way back up to a new high. However, I do see a good looking supply zone all the way at that high that caused that massive sell. So there's a big chance that we're going to reject from this POI. And if we do have a good rejection from this order block with imbalance on the 30-minute before taking that high, we could easily have a bigger range in the making, where this is your range high and this is your range low. That is talking in advance though, but it's something that's very possible. Where this is your upward structure pool, and then we go up, reject from it, and you have your new range right here, right? So these are all ideas. Locally, we can trade the range in here. If we break higher, we're probably rejecting from something in here because it did cause a massive sell. And then we can have ourselves a new range in the making. And maybe this is going to be a big distribution, but you shouldn't expect it since every range so far broke out higher because we're just in a massive uptrend on gold. So you can still expect the same until you see signs otherwise. So yeah, that was the long on gold. It was a simple Model 2 accumulation with a break of structure. That's it. Long on Bitcoin was a Model 1 reaccumulation with a flip and a break back inside the volume area, having a good return to zone. So again, just two Wyckoff trades. And then we looked for a short in here, couldn't get it. Looked for a short in here, couldn't get it. And looked for a short in here and couldn't get it, which is completely fine. Both worked amazingly. Yeah, I will post more live updates on X if I'm seeing something. And I'll see you guys later. Peace.